We're well into February and the big earnings weeks have wrapped up. So I want to talk about earnings, my portfolio, if I made any changes, and what my thoughts are on the future. So let's talk about the major theme of the earnings week, and that was AI investments. All these companies are increasing their CapEx significantly on artificial intelligence and data centers. The one thing, though, that investors did see is we're not seeing quite the profitability yet with AI, so it's kind of more of a long-term view, and we have to be patient as investors, and that is the game of investing, right? Patience. But you have to decide whether you're bullish on AI or not. Me personally, I am. I see all companies that I am involved with investing in AI, and so I really do think this will pay off long-term. And there's some good companies to invest in, and that's what we're going to talk about. So let's talk about Microsoft first. Now, Microsoft reported revenue of $69.6 billion, which was a record and a 12% increase year over year. The growth was driven by strong performance in its productivity and business processes, intelligent cloud, and more personal computing segments. Speaking of intelligent cloud, that segment, which includes Azure, saw revenue of $25.5 billion, which was up 19% year over year. Now, when we're talking just about Azure and the other cloud services, that revenue grew by 31%, which is still phenomenal, came in slightly below expectations. Investors didn't like that, but it was less than 1% below expectations. So not a big deal to me. This is great. Speaking of the AI business side of things, Microsoft's AI business has surpassed an annual revenue run rate of $13 billion, up 175% year over year. CEO Satya Nadella emphasized the company's commitment to AI and its potential to unlock significant opportunities. And I really think what we're going to see in future earnings is some big announcements around AI, and that should run up these stock prices. Now, regarding operating income and net income, operating income increased by 17% to $31.7 billion, and net income was $24.1 billion, up 10% year over year. So it just edged into the double digits. That's where I like to see at least the start of growth for companies I invest in. Anything in the single digits makes me look at them a little bit more. If things slowing down, should I worry? Not with Microsoft. Now, Microsoft also returned $9.7 billion to shareholders through dividends and share repurchases. This company has a lot of free cash flows, so they're able to put that back, or shall I say, give that back to us investors in the form of those dividends and repurchases. Now, some challenges with Microsoft. Despite the strong results, Microsoft faced some challenges, including weaker than expected growth in Azure, which I already talked about, I'm not worried about that, and supply chain constraints. They didn't have the capacity they needed, so they're, of course, investing that $80 billion that they announced to build out what they need to reach capacity and customers' demands. So overall, Microsoft did really well. We'll see here in these charts I put together that their free cash flows did dip, but that's that investment that they're putting towards AI. And this is what you want to see with companies. Some people think you just want to see free cash flows go up, up, and up. When you see them dip, it's okay if they dip due to them reinvesting in a portion of the company or a new segment that they're pursuing that should provide high growth and high profitability in the future. And that's what I think Microsoft is doing. So I'm okay with this. You see the revenue growing there. Long-term debt actually going down. So that is really good to see. They're not having to take out more debt to fund these AI ventures. They're able to do it with the free cash flows. Net income is growing. So all good with Microsoft. I'm very happy holding this company. I will say if it dips below $400 per share, I'm going to be adding some more, but it's still slightly in this overvalued range. I think their PE is a 33%, and the average over the last 5 years or decade is 30%. So I would like to see a little bit more of a pullback before I put some more money in, but it's a big investment of mine. You'll see my portfolio at the end. Let's talk about Amazon. Now, Amazon's revenue, they had $187.8 billion in net sales, which is a 10% increase year over year. This growth was driven by strong holiday shopping sales and increased demand across various business segments. And let's look at that revenue breakdown here. Online stores grew 7.1% year over year. Third-party seller services grew 9%. Advertising was the big winner, and they have such a strong advertising business model. You see here growing 18%. That is phenomenal. Subscription services growing 9.73% and physical stores growing 8%. So I would like to see advertising continue to be in this high double-digit range, but also see these other segments kind of pop into the double digits as well here and there. That would be great. That would show me Amazon is continuing to grow. It's a beast. This company is very profitable and posted 20 billion in quarterly profits, a significant jump of over 88% compared to the same period last year. Earnings per share reached $1.86, surpassing analyst expectations of $1.48. Now, speaking of cloud, Amazon Web Services saw revenue of 28.8 billion, up 19% year over year. Of course, I just said Microsoft grew 31%, but Amazon is the leader, so they're not going to grow as fast. But being 19% in that double-digit range is phenomenal for the size that they already have. However, this is slightly below analyst expectations of 19.3% growth. Again, to me, that doesn't matter. That's not a big variance. And Amazon Web Services operating profits were 10.6 billion, representing more than 50% of Amazon's overall operating profit. So it's a very important part of Amazon. It's growing, and I have no worries here. This is why I'm so bullish on Amazon, part of it. Now, I will say the stock, despite strong earnings, it dipped 4% in after-hours trading due to lower than expected revenue forecasts for the first quarter of 2025. The company expects net sales between 151 billion to 155.5 billion, which is lower than analyst expectations. And that's kind of was the theme with a lot of these companies. And I think that's due to this AI build out. It's not as easy as they think, the capacity that they need. So speaking of AI, Amazon is heavily investing in AI and cloud infrastructure, with CEO Andy Jassy highlighting the importance of AI in reinventing applications and driving future demand. Amazon has great opportunity with AI because of their online retail and everything AI has been able to do. I don't know if you've been shopping lately, but it'll recommend sizes for you with clothing. It's doing some amazing things. I think this is going to benefit Amazon tremendously in the future. So you have their cloud, you have their AI, and all their other billion businesses that they do. I think Amazon is going to be a beast of a company over the next decade. And with this one, I would like to, again, see a dip with this stock a little bit more. I still think it's a better value than Microsoft. But if it goes closer to that $200 range, I will be buying, adding to my position, which you'll see in my portfolio here in a minute. Now, Google, their revenue, they reported 96.47 billion in revenue, which narrowly missed analyst expectations of 96.6. And of course, investors do not like to see that. And if we look at the revenue breakout, Google and Search and Other grew 12.5% year over year. YouTube ads grew 14.8%. Google Network declined 4.1%. Now, earnings per share was $2.15, which beat analyst expectations of $2.13. So this was a positive note amidst the revenue miss. And Google Cloud reported revenue of 11.96 billion, which was below expectations of 12.19 billion. So this was the big kind of negative on Google, was missing with their Google Cloud because they're in third place. They really have to bring up momentum to prove that they have staying power and can compete with Microsoft's Azure and Amazon's AWS. So this one was one of the weaker points of their report. And with YouTube, advertising revenue from YouTube was 10.47 billion, slightly above expectations. However, the growth rate was slower compared to the previous year. So I would say this is still a good thing overall. With AI, Google announced plans to invest 75 billion in capital expenditures for 2025, significantly higher than the previous year's 52 billion. This investment is aimed at expanding its AI capabilities and infrastructure. Now, despite the positive earnings per share, Alphabet stock saw a steep drop of over 9% in after-hours trading due to the revenue miss and concerns about increased spending on AI. But again, if you are bullish on AI, Google also has good potential. They have the massive search business. They have Google Maps. This company is entrenched into certain parts of the world where AI will be very beneficial. So I really think Google is a good bet. Now, with their drop being now in the $190 range, I think this company is a buy right now. I do think that we could see some more pullback. So it's up to you if you want to wait a little bit or not. But I think it's a buy now. And it's one I'm considering. I haven't pulled the trigger on this one yet. But I think Google, the more I've learned about it, the more comfortable I am with it. I used to be someone who was like, you know what, Google search, that's their main revenue source. And if that gets pulled away from them or someone else comes in, it's going to be devastating. But so far, no one has been able to come in and take market share from Google or its revenue that it makes. It's been growing steadily. And we saw the 12.5% growth in Google search. So I think it's a very safe business, but that's up to you. Let's move on to Meta. Now, Meta reported $48.39 billion in revenue, a 21% increase year over year. The growth was driven by strong advertising revenue and increased user engagement across its family of apps. Net income, the company posted a net income of $20.84 billion, up 49% from the previous year. This was a significant jump, reflecting Meta's improved profitability. Earnings per share for the quarter was $8.02, a 50% increase year over year. This beat analyst expectations and contributed to the positive market reaction. So Meta's been killing it. User engagement. Daily active people reached 3.35 billion, an increase of 5% year over year. How are they finding more and more people? Ad impressions delivered across Meta's family of apps increased by 6% for the quarter. Now, with AI, Meta announced plans to invest $60 billion, or $60 to $65 billion, shall I say, in capital expenditures for 2025, focusing on expanding its AI capabilities. Mark Zuckerberg highlighted the company's commitment to AI and its potential to drive future growth. So despite these very strong earnings, Meta stock initially dipped due to a lower than expected revenue forecast. Again, we're kind of seeing a theme here. However, it rebounded after Mark Zuckerberg was optimistic in some comments he made about the long-term AI strategy. So again, another company, if you're bullish on AI, I think it's a really good bet. And it's one that I used to own in my portfolio. I got out of it. I regret that, because if I kind of did my analysis and research that I do now, if I applied that back then, I would have seen a company with huge upside potential due to a low valuation and a company that has a strong footing in a lot of areas, right? It's that wide moat, and Meta has that. Now let's talk about a company I've been considering buying. I'll let you know if I bought it or not, and that's Uber. This company fascinates me. They reported $12 billion in revenue for the earnings quarter, a 20% increase year over year. The growth was driven by both mobility and delivery segments. Now, if we look at the revenue breakdown, you'll see mobility grew 25% year over year. Delivery, 21% year over year. Those are phenomenal numbers. Now, its freight business is struggling right now, so it had no growth, but we'll see what they can do here. It's still bringing in $1.28 billion of revenue, but we need that to grow. But really, their areas of potential are mobility and delivery. And I think delivery is going to be something that will outperform beyond expectations, because they're starting to partner with different businesses like Home Depot to deliver things. So it's not just food anymore. You're going to be able to get a lot more products, I think, in the coming years. And that's where I'm very bullish on Uber as well. Now, gross bookings grew 18% year over year to $44.2 billion, with mobility gross bookings at $22.8 billion and delivery gross bookings at $20.1 billion. So you'll see there the growth of 18% in both respectively. Again, 0% in freight. And then Uber posted a net income of $6.9 billion, which includes $6.4 billion benefit from a tax valuation release and a $556 million benefit from net unrealized gains related to equity investments. So it'll be interesting to see the future quarters when they don't have these kind of tax benefits that they're getting. Now, with adjusted EBITDA, that grew 44% year over year to $1.8 billion, with adjusted EBITDA margin of 4.2%. Monthly active platform customers reached 171 million, up 14% year over year. That is what you want to see with this company. And trips during the quarter grew 18% year over year to 3.1 billion. They're making 3.1 billion trips just in this last quarter. That's phenomenal. Cash flow. Uber generated $1.8 billion in operating cash flow and $1.7 billion in free cash flow. The company ended the quarter with $7 billion in unrestricted cash and cash equivalents. So Uber anticipates gross bookings growth of 17 to 21% year over year, which is really good on a constant currency basis, translating to reported gross bookings of $42 billion to $43.5 billion. And so with Uber, there was strong growth across its segments and solid financial performance with a positive outlook for the upcoming year, and it's gone up massively since earnings. I think it's up 18%. Well, it took a dip because of the strong dollar, which means their business outside of the US, they'd have a hit to their revenue, but then the dollar announced the next day it was weakening, so Uber went up. So I think it's a combination of that with its strong performance, and I think people are starting to look more closely at Uber now. There's a lot of funds investing in it. I've been reading about. So this one is one that I did not buy. I regret it a little bit, but it's hard sometimes, right? You look at earnings and you want to take time to digest it and think about it and not just react on emotions. Sometimes you miss the boat that way, but sometimes it's better. So I'm going to continue to look into Uber, keep it high on my watch list, so I might buy soon. We'll see if they have any dips. I think the stock is more volatile, and we'll see what happens. So let me know on all these companies what you think. But here's my portfolio. I'm up 34.43%. There's Microsoft for me in the green, 71.93%. Despite that pullback, it's still doing really well for me. Amazon's up over 100% for me. I'm very bullish on Amazon. I think this company is going to be one of my strongest performers. And then, of course, you don't see Uber added here. If I could go back in time, I would have bought it during that dip when it reached $63 per share, and now it's in the 70s. But that's just how it goes. We all miss out sometimes. Let me know if you bought Uber or any of these stocks. Do you have any concerns with AI and the profitability in the short term? Do you think it'll be worth it in the long term? I do, and I think these companies are all worth buying, especially on any future pullbacks. So there's my take on earnings week. I think AI is important. It's going to be a part of our future. And I know companies that are investing heavily in it. Companies that you might not even would consider would be ones to do it, and they're doing it. So really think about this. Really make sure you have an AI play in your portfolio. For me, it's Microsoft, it's Amazon, it's ASML. And I think that some other companies have some indirect exposure to it as well. They might pay for some AI, but it's really those companies that are going to be providing it, and that's what you want. So give me your thoughts. We'll see if I own or buy something soon, shall I say. But let me know your trades and your thoughts on these big earnings we had. And we'll see you soon on Mark Arnold's Finance. Thanks for tuning in.